Hello, everybody. Steve Olson here with the Peak Group. It's very nice to have you with me today. I'm recording for a few people who have asked, and I know there have been many more emails of people wondering, hey, what did you guys talk about in all those luncheons that you were advertising? We were recently in Provo, in Palo Alto, and in Newport Beach. Those are places where we do have a high concentration of clients, but they're not the only places, and we know that you're all over the place. So given that, we wanted to get everybody a chance to kind of see what we had been talking about. There's not a filet mignon that comes with it when you're watching it virtually. I apologize. We like to get out on the road regularly just to get face to face with our investor clients, and we're certainly not done. So we may be stopping in nearer to your location soon. So keep your eyes peeled for an announcement like that. But in the meantime, let's talk about what we went over at the various events and what is being offered by the Peak Group right now. I'm going to kind of scroll through these. Those of you that have not met me before, my name's Steve Olson. I'm the Chief Real Estate Officer for the Peak Group. I joke it's kind of a made-up title that means I do a little bit of everything. But we're based in Dallas-Fort Worth, and we operate in Texas and Alabama. We also have a joint venture in Indiana that I'll get to, and one other new state that is just barely coming forward right now. You're going to be among the first to hear about it. Some of the people at the last two luncheons heard about it as well. We are a vertically integrated real estate investment company. It means we handle everything under one roof, and we typically focus on single-family properties, multifamily properties, meaning small multi, and commercial flex space. And there may be more to come, but right now that's what we're good at. That's what we know, and we're just going to keep grinding on that. And I think it's important to talk about how we do this. You don't need to get too far into the weeds on this graphic, but really what this means is we have everything under one roof that rolls up to something called the Peak Growth and Equity Fund, right? The reason that we do this is because we need all of our various entities under this roof to have the same finish line. I've worked in development entities before where we didn't, where the brokerage side, the management side, the construction side, they all had their own finish line in mind. And when that is all that everybody is driving towards, oftentimes you, the investor, get left holding the bag at the end. And let me just give you an example of this. Property management teams and builders are notorious for getting into arguments, right? For example, the construction company wants to blame things that they didn't finish on, oh, well, that was the management company. They leased it to a bad tenant. Whereas if the management team is having trouble leasing a property, they want to blame it on the construction company. Well, if they had finished this on time, or if this had been done this way or that way, we wouldn't be having this problem. And you're watching this cat fight as the investor go back and forth. You go, yeah, well, I still am not getting the cash flow that I thought I was going to get. So we want to avoid that, where profits and incentives all roll up to the highest level, where we are aligned in our interests, and that interest is getting you, the investor, a cash flowing property, because if we do that, we know you're going to come back again. And so that's how it's all set up, and we just like to make people aware of that as we begin talking about these various opportunities. So chances are you're in a part of the country where the deals either don't make sense, or maybe you don't have the ability to do them on your own. And I always pick on California. It's my home away from home. If you're a Californian and you want to start a small business, there's a number of different routes you could take. And those are all the freeways leaving California. And maybe you're in Washington State. Maybe you're in D.C. or Boston, or even where I live, in our funding and marketing offices in Utah, they're extremely difficult to get deals done here too. So if you want to invest in cash flowing properties somewhere else, we'd love it if you would give us a shot. So we're going to talk about just kind of the wide range of properties that are available that we're going to present to you. Now, this one, you're going to have to message us to get on the backup list. Literally, before I started recording this, we sent out contracts on our last two brand new construction homes in a build-for-rent community called Pinewood Trace. And this is located in Hueytown, Alabama. It's about 20 minutes from downtown Birmingham. Birmingham is a great market if you want to load up on single family properties, right? You can buy new construction typically in the 260 to 280 range, and you're going to get rents from anywhere from $1,600 to probably 1900 on brand new construction. And we can typically deliver a cap rate a little north of 6%, and we can also deliver that to you fully leased with a 2-year free management incentive, as well as 2 points to buy down your interest rate. Now, sometimes those incentives are tweaked a little bit depending on the properties and where they're located, but that's usually what we deliver on new construction. And let me just give you a little bit of flavor there. You can see actually the first few homes a while back ago there in Pinewood Trace. Birmingham is a very wooded area. If you're from the western U.S., you're going, wow, is that just in the middle of nowhere? I can assure you it's not. It's just very wooded, and they cut these neighborhoods in. You can be driving down the highway surrounded by trees thinking you're nowhere, but there's a lot of houses or there's a lot of businesses on the other side of the tree line. And those are 2 actual homes from the project, as well as a staged picture of one of the homes. We love to stage homes when we're leasing them in a build for rent community, because it just really makes it come alive for the tenants, and it makes the leasing go that much better. You can see the little pin from Google Maps there where Hueytown is located. And like I said, this is about 20 to 25 minutes from downtown Birmingham. This is your classic suburban neighborhood. Your target demographic is going to be young families that want to live not super far from where they work, but they want to be in the Hueytown schools, which, as I understand it, are county schools and are considered to be a little bit better for those people that have kids in schools. And you get it, you get a nice spacious yard, you get a driveway. Some of these are 1-car, some of these are 2-car garages, and usually 1,400 to 1,500 square feet. So that's your target tenant demographic. Now, I don't have a slide on it, but I certainly want to talk about it for a minute before we exit the Birmingham market. Another great program that we have there, because I've really been talking a lot lately about how, as an investor, you need to go on offense in this climate. With rates having been stubbornly high, although they've been backing off a lot recently, many people I saw on CNBC yesterday, them talking about how we're probably going to emerge from this real estate ice age that we've been in. You can't go from the breakneck speed that real estate was at in 2020 through 2022 and then cool off by, I would say, 80% at least in the investment world and just stay there. There's a phrase statisticians use called regression to the mean. And I think with this interest rate coming down and the market having been almost frozen for a number of years, we're probably in for what people, if you remember after COVID, revenge travel, right? People they were cooped up for so long, they had got their stimulus checks, they had a little bit of money. I haven't been anywhere, I've been stuck in my house. I'm going to travel. And travel went crazy. I think there's going to be revenge buying, revenge investing as we have that regression to the mean. A little bit of a sidetrack, but was essentially going to introduce to you the Concierge Burr program that we offer here at the Peak. That's a way that you can go on offense. And this is where you can see my mouse hover over here. We go up into the northern part of Birmingham, into a submarket called Center Point. And that is a B-class neighborhood. There are some C-class segments. There are some borderline A-class segments of it too. But mostly it's B-class, your home built in the 60s and 70s and maybe the 80s. And this is for investors who want to get lower leverage, where we contract a home that's in bad shape. You, the investor, comes in and closes on it, and we've got a hard money fund that you can use to do that, where we line it all up for you. You could close in a week. We have 2 of these homes available now. And we do the renovation. It usually takes 4 to 6 weeks, and then you refinance into a long-term loan. Here's the gist of it. If you've got the intestinal fortitude to go through a remodel like that and then refinance, you're going to get into that property that is probably worth an after repair value of anywhere from 180 to maybe 200. You're probably into that for about 12% down. And by 12% down, I mean all in. It includes your closing costs, it includes everything. And whereas if you buy a normal turnkey property like the ones these new construction ones, you're going to need 20% down plus your closing costs, which could be $6,000 or more. And so that higher leverage with really good cash flow allows you to play offense and to get cash on cash returns of in excess of, I think, at least 12% or more, sometimes as high as the high teens on these concierge BRRRR properties. So it allows you to scale up and get cash flow on those. Most importantly, this is an analogy I like to use. It allows you to get that good base of ownership and experience under you so you can, if you want, springboard into bigger deals. I told the investors at the luncheons that we did that I've got a good friend who runs a large office for National Car Rental. Many of you have probably rented a car from National before. And I was actually quite surprised to learn from him that a core part of National's business model is not necessarily the rental of the cars, it's selling them. Renting these cars that's what allows them to carry those for a few years, and then they make their money on the sale of the cars. And I think for some investors, single family properties are not a lot different. It allows you to get in the game. The rent allows you to carry that property for a while, make some cash flow, but the money comes from the sale, and that's when you can 1031 exchange, and then you start getting into maybe duplexes or new construction or fourplexes or commercial, something like that. So the BRRRR program is a great way for, I've seen some of our deals require as low as like $17,000 total out of an investor's pocket to get into deals quickly. So Birmingham is a great market for that. So if you're interested in it, please contact us about whether it's the new construction or the concierge BRRRR program, where we essentially take that property from purchase through renovation through refinance for you. It allows an investor that lives far away to do deals that they would otherwise not really have any ability to do unless they want to buy a lot of plane tickets. Okay? So let's move on. Let's kind of ratchet it up. Let's talk a little bit more about how to go on offense. Some of you have seen the advertising for our project called East Powell, and these are duplexes in Fort Worth, about 10 minutes south of downtown Fort Worth. They are in the urban core. This is an infill project, and it kind of has two components to it. If you're saying, hey, I want to get a duplex, I'm looking for something to place into service by the end of the year that I can do cost segregation on or just start cash flowing immediately, we have 10 lots in here, and 4 of them are slated for our CO model, which means close when it's finished. You could even close when a tenant is placed. And we manage a lot of doors in this submarket, which, like I said, is very close to downtown Fort Worth, as well as the medical center, where tons and tons and buckets of medical jobs. So you can invest in a duplex for $430,000. These are 2-bedroom, 1-car garage duplexes. Your tenant demographic is not families. These are typically busy professionals, maybe a couple that has 1 child, but they're not looking for lots of bedrooms, lots of parking. They're looking to be close to the action, right? And as you get closer to the action, units get smaller, parking gets more compacted because of the density. But the great incentive that we have on those is that you can get a forward committed interest rate of 4.99%. So that brings some decent cash flow because we go interest rate lower than the cap rate. Whenever you do that, the math is really on your side. There's another wrinkle that you can use on this to go on offense. Like I said, going on offense means, can we cram those interest rates down, or are there some aggressive tax incentives that we can take? And this project, just by sheer dumb luck, we didn't initially do it because it didn't exist at the time that we bought this land, is it's located in the federal opportunity zone. And I'm not going to get too far into the weeds on that today, but let's just say this. If you have a capital gain of any kind, right, of any kind, you can typically roll that into a federal opportunity zone, and the guidelines are a little better than most 1031 exchange guidelines. I would encourage you to get with your tax advisor on it. You're going to need a little bit of legal work done as well to participate in an opportunity zone. But if you sold crypto, stock, a business, real estate, and you've got some kind of gain, and you're looking to permanently exit the 1031 treadmill or the depreciation treadmill, this is a great way because they say that in the past, there's only 2 ways to get off the depreciation treadmill for that recapture tax. It's to die or to do a 1031 exchange. Well, now you've got a third way through the federal opportunity zone. And this was getting a little bit watered down as time passed. I'm not here to politically advocate, but with the new passage of the big beautiful bill, a lot of these very compelling opportunity zone benefits are now back. So I highly encourage you to research it. You can contact us. We have some good people we can refer you to walk you through opportunity zones as well, and whether it could be a benefit to you. The coolest part about that, if you do that in this opportunity zone, you actually have to build real estate. You can't buy a duplex that's done, because the whole point of the opportunity zone bill is to spur development, is to create new development. And we offer you a deep wholesale discount if you do that. We'll build the property for you, but you're going to bring in construction financing or cash, which we can help you on the construction financing as well. But you get a wholesale price of $360,000 for a duplex. $360,000 for a duplex, and that gets you at a cap rate of 6.5%. So we highly recommend that. You can see some finishes, and the duplexes at East Powell look different than that one. That's really boxy. We did a better design for East Powell, but like I said, we manage a number of doors in the area, and that's an actual picture. But you can see how we stage those and how we make them look. We go granite countertops, which used to be kind of a crazy thing that nobody ever did on rental properties, but that's now something that we always do. You can see that location straight up I-35 to downtown Fort Worth. It's not far. Let's keep going on offense here and talk about Peak Flex. You may have seen many of our emails advertising the Flex project that we have in Weatherford, Texas. And we actually just contracted a brand new Flex project for a very big client that wants the whole thing. And we plan on doing much more, because as I like to say, and I told everybody at the various luncheons, when it comes to investing in Texas, two things can be true at once. The first thing that's true, property taxes and insurance in Texas are a problem. They're extremely high, right? And you have to figure out how to deal with that. Do you buy deeper? What do you do? A cap rate is a cap rate. It does include property taxes and insurance, but notwithstanding, even if you get a good cap rate there, it does make investors nervous, right? Because carrying the property when it's not rented it requires a lot more, as opposed to Birmingham, where the taxes and insurance are just extremely cheap. Not so in Texas. Well, I said two things can be true at once. The second thing that's true is people just keep moving to Dallas, right? It's going to pass Chicago as the third biggest metro in the United States soon. People just keep going there. And if you've been there, you can see it can expand forever onto the horizon. It's become kind of its own economy because it's so large. And so a lot of investors get frustrated. They say, I think it's a good market. I want to go there. I just can't deal with these taxes and insurance. Well, without further ado, commercial flex space priced on a triple net basis, where the tenant is responsible for the taxes, insurance, and maintenance of the property. It doesn't eliminate the risk of those things, but it pushes it to the tenant, and it evens out that expense over time to make it much more predictable. Here at Peak, all the properties that we sell are fee simple, meaning you are the owner. You can choose how to finance it, when to sell it, how to manage it. You may be subject to some CC&Rs from time to time, but you're the boss, not like in a fund. And what's great about triple net flex space is this is as passive as you can get while having fee simple title to real estate, because the tenant isn't calling you if there's maintenance. You are not having to pay those property taxes or deal with that insurance. That is all on the tenant. It's as close to clipping a coupon every month as you can possibly get. And I'm going to brag about us a little bit here. I think we're very innovative on this point, because for most investors, if you want to participate in commercial flex space, and I'll go to the next slide to give you an idea for what this looks like, you have to be the developer of the flex space, or you have to be a limited partner in a fund. Phrased otherwise, you have to be a limited partner in a syndication, which means you don't control it. You've got to put all your chips on the sponsor or the general partner to run it the way you want it. And you know what? That may be perfectly fine. I'm an investor in some syndications myself, and it's because I trust the general partner. And I don't want to babysit all the money all the time. Sometimes I just want somebody else to do the work, and that's great. But if you want to own flex and you want to control how you finance it, when you sell it, how you lease it, this is the only way that I know of to do it in a small quantity, because otherwise if you want that control, you've got to go buy that acreage, do that development, and build it yourself and operate it yourself, or buy an already existing flex space. So you can see some renderings of what we're talking about here. It's a big, tall, roll-up garage door, and inside, other than typically a bathroom and an office that we finish out, there's nothing else. The tenant brings their shelving, their equipment, their flooring, right? And even in the back part of the flex, we have a mezzanine piece that can be finished for even more square footage. This is in Weatherford. That's about a half hour outside of downtown Fort Worth. You can see it on the map there. Just to the right, where you start to pass Willow Park, is where you go through about 10 minutes of open space that a family owns and is slowly developing, and then boom, you hit the outskirts of Fort Worth. So a lot of people that live in Weatherford either work there too, or they might commute into Fort Worth, which is, like I said, is typically a half hour. We're going to try this video that I recorded with Todd Bowers, our director of construction, a few weeks ago. This has come even further since then. We've poured concrete, we've poured curb, and it's really coming along. We have one building left with 5 flex units in it, and then we'll take a pause while we develop phase 2 of the Weatherford Business Park. There's me sitting at this very desk. Let's see if the video works with my conversation with Todd. It really brings the project to life for you. So I'm gonna click play on this. Just know that the captions are not perfect, but they give you the right idea. Hey everybody, Steve Olson here with the Peak Group, sitting in my air-conditioned office at our Pleasant Grove, Utah offices. Todd is smirking. This is Todd Bowers, the Peak Group's director of construction. He is not in a climate-controlled environment right now. And he is probably doing his best to keep it together. How you doing, Todd?
We're doing well out here. It just happens to be a nice cool 102 today out in Texas.
102 in Weatherford, Texas is like probably 120 here in Utah, I would guess. Yeah.
But this is better than rain. We would much rather have this than rain, so we keep the crews out here going. Rain in May and off in June, it's kind of kick us in the butt a little bit.
Yeah, okay, great. Well, Todd is on site at Weatherford Business Park in our flex buildings, and the first building is behind Todd. You can see the crews there. And I think, 2, maybe 3 weeks ago, Todd, that was just a concrete slab.
It's been 2 weeks exactly now that we had the slab poured, and they started on Thursday 2 weeks ago with framing. See how far they've come so far. This is a quick process. The thing that takes the most time is what they're currently doing, and that's skinning the building and siding, because they have to put that insulation behind it. So if we didn't have to do that, they'd probably be done.
Yeah. Okay, so they're putting insulation on. When does the roof go on?
Roof's not on. That's the last step. So they'll do the siding. They fold in the insulation over one another, and they put 2 layers of insulation, and they'll start laying the roof panels. As soon as they get done, they just got to make it from where that tile is to the corner, and then they'll be done with the siding. So they'll probably start on that roof tomorrow.
That's great. Tell me if this is accurate, because this is what I tell to investors. I tell them they'll either have sold this building or be dead by the time the roof needs to be repaired. What do you think about that?
I think you're probably pretty accurate. We're getting a lot of interest on it, investor side. And the good news is that probably getting 3 to 4 phone calls a day from potential residents and tenants. We're have a pretty good, solid list of people who want to move in here, and it ranges anywhere from yesterday. We're in a boxing club in here, 1 or 2 of the units. We had the last mile people, and contractors all touching and pinging us a little bit. So we're excited about getting at least maybe before we get a CO.
And that building behind you, when do you expect to get a CO, Todd?
So my windows and garage doors show up on site for all 3 units the first week in September. So as soon as they land, we're probably going to be take about a week, about the second week in September. One behind me will be CO'd. We'll be pretty close to about 2 or 3 weeks behind on building 2.
That's very good. That's very good. And then when you get the C of O, I mean, is the intent to just build out the office and bathroom in these, or are you leaving that open to the tenant discretion?
We are going to leave everything wide open. We're going to build the shell, make sure that it's ready to go for a tenant, because we just don't know what the tenant is going to need or want in their space. So if they want the standard one office that's about 240 square feet and a bathroom right behind it, well, that's what we have in our business model that we're sharing with investors. But if they come in and say, hey, I want half of this office and I want another bathroom, well, then we have to start bidding that out as the plan accordingly. Yeah. So this prospective tenant that wanted to do kind of a boxing gym, I think I heard you say he wanted 2 units. So are you going to leave that entire building wide open and then just separate units as needed, or? Yeah. Let's walk into one. Okay. We are in the first building. This would be office. Would be space number 1. You've got the 12 by 14 roll-up door. You've got 6 by 9 storefront glass, and then that first unit comes all the way to this first hall. Right here. This would be 1 unit. This would be 1,350 square feet. We made the roof line tall enough and the plate height tall enough to be able to put a second story in if we needed to, if somebody needed some second story office or a mezzanine in the back, something of that nature. So it's plenty tall to have that in here with 9 and 10 foot ceilings down low still. But yeah, we're gonna finish this whole thing out, and it's not gonna look a lot different than this right here, except that all the stuff is gonna be out of it. Yeah. So when somebody comes in, like the boxing guy, if he goes, hey, I can't do this in 1,350 square feet, I need 2 units, well, we'll rent him both of these spaces right here and then configure it as he needs. That's great. Well, I'm glad to hear that you're getting a lot of interest. I mean, I continue to see reports that DFW is one of the biggest markets in the country in need of smaller flex, because most of this flex is just huge, and a small business just doesn't need that kind of space. Yeah, this shallow bay flex is going to kind of turn the industrial market on its ear, I think, pretty quick, because the big box stuff is, like you said, it takes large companies, very large companies. Yeah. This is for your small to medium-sized business, which is what the middle band of the country is. That's where the majority of the people want to be next to their house. They want their business next to their house. And so we try to get into areas that are populated with proteins. We could put these next to residential subdivisions where you couldn't put, 1 million square foot big tilt-up wall industrial space. Excellent. Well, we wanted the investors to have a chance to see what's going on there live. Anything you want to add before we let you get back into the air conditioning, Todd? Yeah, we're just really excited to see this going up. And now we'll start pouring slab 2 next week, slab 3 the week after. So, let's touch base again here in about 3 weeks, and you're going to see this place transform. What do you think, Todd, front to back, from when you pour a slab to when you have a C of O? What do you think the timeline is like? We're gunning for 3 months. 3 months. Okay. Hey, thanks. Go get back in that AC. All right. Thanks, Steve. See ya. Okay, there you have it, everybody. That's just a video live on site with Todd. You can see that on the blog section of our website too, and we'll likely release some new ones here shortly because it is even further along now. And we wanted to wrap up with a couple of joint ventures. As Peak looks at new markets, there's a lot of places that we'd love to be. We work with a lot of builders because of our history, and sometimes there's projects that make sense to let you know about as we consider our expansion. And we certainly love the great state of Indiana, the crossroads of America as it is known. And this is a duplex and fourplex project. It is the biggest one that we have talked about today. It's 135 total units, and the purchase price is $250 a unit. The cap rate is stellar for a couple of reasons. Number one, your land cost in Indiana is just low. So we don't have to recover tons and tons of land acquisition and development cost on this project. Number two, the rent to value ratio in Indiana is one of the best of the country, meaning the purchase price that you pay for a property compared to the rent that you can get is a very, very good ratio. And then finally, we've got a property tax abatement on this project where you can operate your property at a much lower tax rate for the first few years.
you need to contact us for pro formas and explanations on how that works, because a fair question is, well, great, I've got a tax abatement for a few years, but what happens when I don't? And we certainly have pro formas that illustrate that. Kind of a spoiler alert, I think you'll find that it doesn't change things that much. So these are ready to start construction. We're well into phase 3 on the reservations. So if you're looking for a higher cap rate and higher cash flow, and you can be patient, our team will help you secure a construction loan with our partners, and property management, the whole enchilada is in play. You can see some renderings there of what these fourplexes and duplexes will look like. This is in Fort Wayne / New Haven. I say slash because it's right on the border. Right here, for example, the mailing addresses are all Fort Wayne, but a lot of the approvals had to go through New Haven. So it's kind of in that in a no man's land where, you know, who's doing the mail, who's doing utilities. It's all worked out, but you'll see both cities thrown around a fair amount. We actually, because we have units that are drywalled that have cabinets in place, our team was able to get on site and get a real-time 3D rendering that I want to show you of these townhomes and how these flow, because these are about 1,500 square feet, and they have 3 bedrooms, 2.5 baths, and a 2-car attached garage with a driveway, which is fantastic, right? That gives tenants a lot of what they really want and what they're looking for. This is mostly going to look like the units, but I would just add those look like quartz countertops. Though we are not going to do quartz, we're going to do granite, and that's not pure wood floor. We do LVP. Additionally, on the stairs, we do carpet, not LVP. LVP is very costly to, there's just a lot of cutting and labor to put it down on stairs. And additionally, it's kind of a slip and trip hazard. So we like to put carpet on the stairs. So let's take a look and just walk through what this unit flows like. Oh, it started a little, let me go to the beginning. So you can see, here's your kitchen. That's how most people will set up. They'll put a couch and a TV on the wall or on a little stand or cabinet there. We do stainless appliance packages. I love the corner pantry, right? Tenants always want somewhere to put their stuff. They don't want to live in that clutter, although some of them choose to. You've got a half bath on the main. We're going to take a peek inside of the garage, and I love that counter space right there. Once again, more counter space. We don't finish the walls. It's just drywalled and taped. We're not going to paint them. Now we're headed up the stairs, and those are right by the front door, by the way. The stairs are. We'll go into the main bedroom here. Nice and spacious. Plenty of room for dressers, cabinets, desk. I love the 2 sinks in the main bathroom. People want that counter space, 2 sinks, and a nice big walk-in closet, which is not very common in most rental properties. We're going to flip a U-turn out of the main bedroom now, and you're going to see the laundry closet, right? That's there on the 2nd floor. Tenants typically supply their own washer dryer, although our management team can negotiate that. And you just go back into the 2 extra bedrooms there. They each have like a little mini walk-in closet, not huge, but much better than nothing, or just like, you know, dual doors opening to like a hanger rod. So you can see your 3rd bedroom here. Just mirrored but identical to the other one. We're almost done before we finish our virtual walkthrough here, but you can see what the laundry closet situation will look like. Oh, and I forgot, yeah, there's the other bathroom right there for those 2 rear bedrooms, and then there's your laundry closet. So we dig the floor plan. We think it's going to do really well there in the Fort Wayne, New Haven market. And so we're about to wrap up here. This is a new one. We're just barely rolling this out the door. We have a builder partnership we have been working on for a long time in a fantastic market that I love. It's become expensive, but for a reason. If you've ever been there, it's a great place, Nashville, Tennessee. And we have our hands on a large amount of Class A new build townhomes. And there's some great incentives. The rents in Nashville are quite high for townhomes. and the taxes are quite low, so we can make things work. And I would say quite low comparatively to like Texas, for example. But brand new townhomes are available at $380 a door. It's a cap rate of 5.8, and we've got that builder incentive down to 4.99 on the interest rate, which creates really, really good cash flow of around $300 a month positive. We can even make your closing contingent upon tenant placement. We have a property management partnership in the market that will handle all of your lease up, all of your ongoing management in these A-class communities, of which there are a number. I'd give you some highlights. You can see beautiful A-class townhomes, typically 3-story. Where on the bottom floor, there's usually like an office. There are a few of these where the builder has finished it into a 4th bedroom, right? So let me give you just another picture. You can see those are actual pictures from these townhomes. That's the staged model, but beautiful cabinetry and quartz counters, tiled showers, dual master bedroom sinks. We really love it. We're really excited about this. In the first project, we only have our hands on a handful of them, 7 of them total, and we have another one coming behind it in a couple of months. So if you've been thinking about getting into that market, but due to the rapid population growth and seeing some price increases, have been having trouble doing so, we've got you. Just contact us and we'll get you set up in Nashville, Tennessee. As I finish up here, right, big day, the Federal Reserve is meeting. Will they cut rates? What will that do to mortgage rates? As you know, when the Fed cuts or raises rates, mortgage rates typically correlate with that. But a lot of people think that the mortgage rates have already priced in this rate cut. But in any case, we're looking for that to bring some calm to the market about how, okay, maybe inflation isn't totally running away. Additionally, like I said, love them or hate them, every time Donald Trump says something, does the market need to go into a full panic? It appears that the market is thinking that, maybe not so much. So we hope that we can see some calm and the market thaw a little bit for investors to get back into the market here. And I think what we've shown you here at the Peak Group today is a great way to do it. You can learn more at thepeak.group. That's our website, or reply to any of the number of emails that we've sent you, and one of our team will be in touch. Thank you for joining me today, and have a good one.